The Pender multi-strategy growth fund is really a one-ticket solution that gives investors the exposure to the best-in-class equity exposures at Pender. So this is really looking at three different buckets. So the two key components of this are going to be focusing on compounders, which is long-only equity exposure, complementing that with liquid alternatives, which are going to have exposure to long-short strategies, different market-neutral strategies, which will again buffer on the downside and try and take out some of the volatility. And then we're going to complement that further with looking at some of our ARB funds, which are going to be more of a market-neutral strategies, add some income, and really add some capital gains again to start to dampen the volatility. So net, this is going to be exposure to equity strategies with a focus on growth, but also focusing on minimizing the volatility. So what we're really trying to do is to pair off some really good equity strategies. And instead of just having the sleeves managed and separately, we're going to move between them where we find the best risk reward. This is a growth fund. This should be looked at for investors as a growth part of their portfolio. The Pender Alternative Multi-Strategy Growth Fund is a fund that's a good complement for you're an equity manager. So most people have exposure to long-only equities with a focus on the core part of the market. This will be a nice complement strategy that's going to offer some of the upside in different parts of the market that most investors don't want to go towards, but also fix on the downside, dampen some of the volatility, and really focus on some of the downside capture by complementing different managers, which will offset each other and hopefully with a good positive outcome with a nice Sharpe ratio and some good risk adjusted returns. It's all about complementing different strategies. Multi-manager structures throughout the last few years have managed to outperform the markets with better risk reward metrics. So really to manage risk in this fund, it's all going to be about getting that complement between the different managers. And this is where you combine the absolute return, the market neutral strategies with the compounders. The compounders are always going to be a little more volatile than the other parts of the market because they are long only focusing on parts of the market that have higher risk reward and higher volatility. But we can dampen down that volatility by complementing it with these other parts of the market. So liquid alternatives, market neutral strategies are really going to be what's going to minimize some of that downside.